It's time for the Greater Sacramento real estate market update for the month of October. So let's talk about what the heck happened in September, because I know a lot's going on right now, but let's talk about where the market's been moving. In the Tri-County area, so homes for sale up 5.7%, pendeds are down 11%, and the number of homes sold is down by 16.2%. Now, part of that can be due to rates increasing, buyers not being able to afford as much, so they take a step back from the market. The other reason is because there's just not much to choose from. Inventory is still very low, so buyers aren't finding what they want, which means they can't go into contract, which means that house can't sell. So that's part of the reason that the sales are down a little bit. We are seeing pending activity up a little bit this month, which is interesting considering rates have gone up. They did just drop a little bit, but we'll see what happens with potential inflation from military spending now with all the war situations going on and some of the inflation and jobs reports that are coming out. So we'll get to that. The days on market for the Tri-County area is stable. It's still at 28 days, which throughout my career, 28 days is pretty quick. We used to write 12-month listing contracts, and we don't really do that anymore because things tend to move quickly. So no more sitting on the market for 60, 90, 120 days. 28 is pretty good. The list to sale ratio in the Tri-County area is similar to last month. It's stable at 98%. That means homes are selling at 98% of their list price. And obviously that's an average. Some sell for more, some sell for less. However, inventory is up by 28%. That's a pretty big jump, and there's two reasons for that. One, inventory is going up. The other is that drop in the rate of sales. So as the sales slow down and the new inventory increases, the standing inventory or the month's worth of inventory starts to increase. That's why we saw that huge jump there. I would say overall it is normal for this time of year. Market always tends to slow down a little bit. Inventory piles up during the slower fall and winter season. I'm not seeing anything alarming, so we'll just keep rolling with it. The median sales price is up 0.9%, so a little under 1% over August. Still, that's it did drop in August. So July peaked, August dropped, September's back up a little bit. That just shows stability in the market. We're not seeing crazy movement. Everything is pretty stable for right now and pretty normal to see a peak in July and then things start to taper off, later in the fall, usually around September, October. So let's talk about Placer County. Homes for sale up 6.3%, so similar to the Tri-County area. Pendeds dropped by 9.9%, and the number of homes sold is down 16.1%. So again, buyers aren't finding what they're wanting, and some of them had to step back from the market with rates going up. So a combination of things. Demand is dropping off a little bit, and that again happens this time of year. Days on market improved in Placer County, so it went down by 1 day from 33 to 32 days. So still moving really well in Placer County. However, the list to sale ratio dropped from 98% down to 96%, and we haven't seen that for quite a while. 96% is a pretty low percentage for a sales rate in Placer County. So pretty interesting. Now, I did want to dig in and see, is that because homes are getting listed at higher prices, sellers are being unreasonable, so they have to come back down to reality in order to sell? But that's actually not the case. The average list price in Placer County did drop as well. So it seems like buyers are really negotiating hard on the properties in Placer County. And it looks like sellers are saying, you know what? All right, let's just get it sold. Let's negotiate a little less. Let's try to keep less in pocket, but at least we get the property sold. So it's down to 96%. So interesting. That I do want to keep an eye on. Median sales price actually dropped by 0.7%. But again, Placer County, the median sales price has been pretty stable. Average sales price actually went up. But I do tend to look more at the median. However, that can swing once in a while because we do have those really high-end listings in Placer County that pop up once in a while, 6, 7, 8, 9, 10 million. So keeping an eye on that. Months of inventory in Placer County up 26.6%. That sounds like a big jump, and it is, but we're still only at 2 months worth of inventory, which in the grand scheme of things is still solidly in seller's market territory. So keeping an eye on things, again, that's partially more inventory and partially a reduction in the number of homes selling. The two of those combine, and we see the months of inventory increase. We'll just have to see how things go in quarter 4. Moving on, the number of canceled listings throughout the year. I've been keeping an eye on that because what that means to me is that sellers are testing the market. They're putting their homes up for sale. If they don't get the price they want, they're making the proactive decision to take it off the market, not just let it expire. So I've been really curious to watch those numbers throughout the year. They started out fairly low beginning of the year. Obviously, when we have more activity, they were increasing, took a big jump from June to July, a really big jump from July to August, and then dropped off by, I'm going to say about 20% from August back to September. So seems like they're getting in line, and part of that maybe, maybe sellers just aren't pushing as hard, or maybe they're letting it ride. And they're gonna say, we're gonna let it sit and expire instead of actually canceling it, which is kind of interesting. So that brings me to the next point. I want to talk about rentals just a little bit. I do expect the rental market to soften up a little bit. Part of that is because those sellers that try to test the market don't get their homes sold. Maybe they've already moved out of state or moved out of the property, and they decide, you know what, I'm going to rent it, and then hopefully I can get the price I want in a year or in 2 years. So I think we're going to see more rentals hitting the market, and supply and demand. When we have more supply, the demand tends to drop off, which means we may see some lower pricing or lower rental rates for potential tenants and for renters in the area. We'll see how that goes. I also think we're going to see some of the short-term rentals, the Airbnb types, if they're not getting the income that they wanted or expected, and they want to keep the property, they may try to convert those from short-term to long-term rentals, get a lease in place, which means they need to put those on the rental market. So we may see increased inventory for rentals, and those buyers that normally we would see turnover, and those buyers that are priced out of the market because of rates are staying in their rentals longer, so they're not vacating those. So we're seeing some back and forth, but overall, I think we're going to see some increased rental inventory. And again, keep an eye on the commercial and the auto industries. I think those are going to see some major upheaval within the next 6 months. So we'll get into some of those more specific things in other videos. If you like the information I provide on the greater Sacramento region, please consider subscribing to the channel. If you have questions or you want to set up a consultation for yourself as a buyer or seller, I'm glad to do that. Just contact me directly.